in place basically for payments of for payments of suppliers, also financial information, and also payment of works undertaken by ODS have been put into being. And secondly, a business as usual, where basically everything is up and running and being run through the QL system without the assistance of workarounds, and we are sort of into usual business processing and planning in any future upgrades of the system. I think it's fair to say that in terms of that steady state position, where we're unlikely to be there until October time, actually, at the earliest. There's still work to be done to get to there, but as I say, we have all the workarounds in place. What we still don't have at the moment is financial information for ODS business need, actually. In terms of sort of other updates, we've had a look at the resources that we need to get to these positions. And it's fair to say that we'll be coming forward with an update in terms of additional resources that we're going to need in order to get us to these positions of both steady state and business as usual. And that will be coming through probably as an urgent decision, actually undertaken by the chief executive, but reported through to cabinet and council in the normal fashion. So in summary, yeah, a great deal of work has been done by the teams, and a lot of problem solving, actually, but we still have some work to do to get into those positions of what we deem to be steady state and business as usual.
Thank you. I see Andrew has his hand up. Andrew?
Yes, thank you. Well, my first question is, I have got a couple of questions about this, but should we be in confidential session for this discussion?
Can you talk up a bit? I can't hear you. I don't know if I'm the only one. You're not very loud on my machine.
Sorry, is that any better?
That is better for me, yes.
Okay. Should we be in confidential session for this item?
It largely would depend on where you want to go with the questioning. If it's able to be kept sort of broad enough brush, then it can be kept public. But if you do want to go into more granular detail about some of the specifics of the issues, then it might be necessary.
I don't know how to tell you what I was going to ask without giving that away.
Shall we put it to the end and go into confidential session at the end? Because I imagine Nigel will be here at the end, and so we'll just put a confidential session at the end, and you can ask questions about the area in the confidential. Yeah.
I mean, I don't know how many questions we have. It might be easier to do it if we can put to the panel to go to confidential session now. Then
it's technically more challenging for me. Just
it's technology.
I could hear the question, James, and then just advise you that that's not something I would want to discuss if you wish.
All right. Well, I was simply going to ask Nigel, and I hope I'm not breaching confidentiality even by asking about the financial implications for the council in terms of recovering the costs of the extra work and indeed the any loss of income. Is there any update on that?
Yeah, that would be something which I'm not going to go. I wouldn't like to go into too much detail here. I mean, sufficient to say it's still on the radar, Andrew. But clearly that's something which I think we both need to come back to, basically, both supplier and the council at a point in time, actually, and possibly at the moment now's not to do that, actually. So that's all I can say. But yeah, if you want any more detail, then I can do that, but not in an open session, I think, actually.
Okay, understood.
And could I just ask, presumably by the time we come to the budget round, I mean, it should be sorted in terms of the problems, but we then still will be assessing the financial impact. Is that correct?
In terms of the in terms of the system, we should be in that business as usual. So we should have resolved all the workarounds and be up and running with the provision of financial information, basically both the council and the ODS. Absolutely. And in terms of sort of any further discussions with the suppliers, and we should be entering those discussions as well. Actually, yes.
Okay. So, any other questions, or may we approve the minutes, the notes from the last meeting? I guess, yes, thank you very much. So let's go on now to agenda item 5, which is the performance. I'm just trying to find the selected performance indicators. Could I just, before we start on this, I just want to make a general point, which I'm sure has occurred to other panel members. There's quite a bit of overlap between this and what comes up in agenda item 6 under in the cabinet report. And I just wonder, is this going to be a continuing feature of these performance indicators, or is this a kind of transitional arrangement? Maybe I'll ask Tom.
No, Chair, it will be long term, because you will have essentially this is a standing item that we're currently on. So each meeting will get this, and every quarter there is the integrated performance report. One is a cabinet paper, and one is not. So they do need to be treated separately, even though there is some overlap. We can't really conflate them. So yes, it is a bit clunky, but I think it helps maintain clarity of what we're talking about when we report to cabinet. So it's worth keeping that way.
Could I just ask, this is just a practical question. In the next agenda, the cabinet paper, they're the same questions quite often, but rather fuller answers and more informative. And I just wonder, is there any reason why we don't have those answers in this item? Because it does seem slightly odd. We may discuss it now and then discover that it's answered more fully in the next agenda item.
The answer is I don't know. I can follow that up and ask for greater detail, similar detail to that which is provided in the integrated performance report. I can certainly do that.
Thank you. I mean, it's an odd kind of duplication, and one is actually slightly more informative than the other. Okay. Would panel members like to ask questions on this agenda item, the various performance indicators? I'm looking for hands. I have one or two.
Just as a reminder, this is unless it's to one of the people who's already here, this will be a written seeking a written question to be sent, or you can invite them to the next meeting to come along, depending on which way you want to go.
Thank you. Chris, you were going to ask.
Yeah, I guess it's both a comment and a question, really. Looking at the responses we've got to the on the KPIs, or to the questions we had around the KPIs on the proportion of spend across both the council, ODS, and OCHL on local businesses. The response basically seems to suggest that it's very, very difficult to have a meaningful KPI around this because of the size of some contracts skewing the data. And I guess the question is there a way of us getting to a useful and meaningful KPI that isn't just skewed by a large construction contract that completely throws everything out of kilter, which still measures and monitors what is a laudable objective of increasing spend on local business, but that is meaningfully tracked and that isn't skewed in that way. And I guess it's sort of a question perhaps for the panel as a whole to kind of discuss, as well as if I don't know whether Nigel has comments on it.
Through you, Chair, I think the only comment I'd make is that yes, we could do something to take out the outliers, if you like, from the statistics that we have. So we could we could try and do that. Actually, it does mean a bit more sophistication in terms of what we pull together. You know, as I say, as it says there, if one big contract comes in, basically, then all of a sudden our figures go sort of off the scale, sort of thing. So I think we could look at doing that, Councillor Jarvis, and I'll speak to Annette about that, actually. But it does mean we need to put a bit more input into the target and obviously what we're reporting and how we've sort of taken things out. Of course, the converse is sort of thing. You once you start playing around with the data, sort of thing, it may well have an opposite effect of invalidating some of this. But we can have a look at it, certainly.
Thank you, Andrew.
Yes, thank you. Can you hear me? Okay.
Yes, this is much better.
Good.
Yeah.
Good. Yes, I think Chris makes a very good point, and I was actually going to make a similar one. But part of the response is also about whether the council is contracting with a parent company who then subcontracts to a local supplier, or indeed potentially the other way around. I mean, what it comes down to is, you know, what is a local company? It's a little bit, you know, at the risk of saying the wrong thing, it's a bit like, you know, the current debate about British jobs and things like that, isn't it? You know, I mean, I think we need to keep an eye on the objective, which is to support the local economy, and that could very easily be done by contracting with a, you know, a national company which employs local workers. Is there any way of teasing that out in the measure?
Not from the indicators. I would suggest that we actually get. I mean, our information is taken off the payments database. If we pay a national firm, if we pay Wilmot Dixon, for instance, you know, then I wouldn't know from that basically whether they're employing local subbies basically to do the work. You'd have to go into the contract management to ascertain that sort of information. Not saying it's impossible, but again, it's another degree of complexity to sort of drill into the contract management as to who the supplier is actually employing.
I mean, it does occur to me this might be a kind of subject maybe at a future meeting. If we invite Annette back, we can maybe discuss some of these issues with her, because I'm sure we're not the first people who've tried to wrestle with interpreting figures like this.
Yeah.
There must be some methodology out there. It's a good point. I'm looking any other hands up. I was going to ask just one simple question about how this is all presented in terms of achievement of targets. I've noted it, for example, but it comes up often, and this is again page 17. I've just written, are these cumulative year-to-date figures or actual monthly figures? Because there are targets and they've got a figure for July and so on. Are these cumulative? Yeah, because I couldn't make for some of these numbers, I couldn't make sense if they were not cumulative, but I just wanted to know what it is we're actually assessing.
I think, Chair, they're supposed to be cumulative.
Okay.
The answer is yes, I think.
I mean, it seems that, I mean, as a sort of point of discussion, the amount, it seems that each KPI needs quite a lot of investigation to get a reasonable handle on it, and sort of unpacking each one. I mean, there's several that come to mind. I mean, which you don't really know what they're measuring, what the metric is. So, for example, jobs created locally could be, you know, people who are actually employed in the area. I'm thinking satisfaction with parks and green spaces. I mean, what does that mean? I don't know. I don't know what that means. I dare say they're right, 90%, but I don't know what it means. I mean, do you just ask the people?
Could I suggest, because I think I think some of these are more fully explained actually in the next agenda item in the cabinet paper. I mean, I think there's more about how they do these satisfaction surveys, but I think it might be good if members of the panel, if you were agreeable, if you submitted specific questions about some of these measures that do not seem crystal clear, and then we could combine them and then get a considered response from officers by the time of the next meeting in December. Would that be okay?
That sounds fantastic. Yeah, that sounds ideal. And I think that's something I could, I think that's very helpful.
Okay. Any other? And could I make one very specific question, which I think could be answered? And then it was clarified, is it employees, employers, in terms of the number of employers paying the Oxford living wage? To me, the interesting thing would be to know, are these I know one pub that does, but it doesn't employ many people. I would quite like it to be asked, how many employees do these employers have, so that we can work out the scope of the Oxford living wage, which presumably we could get. I mean, it doesn't have to be precise, but order of magnitude, is this hundreds? Is this thousands?
Yeah.
Would that be possible? I think that's a simple question to ask.
Yeah.
Thanks.
I would have said yes, James. I mean, if we know the employer, we can calculate the number of employees, I would have thought.
Yes. But maybe in general, shall we, I mean, I've got questions here which I could easily send, aggregate and send via Tom. Shall we do it that way? Because otherwise, I'm sure we each have questions. I wonder if there are any just a principle, really, methodology. I mean, I'm glad this is getting better than it was. I would like it to be clarified that it's cumulative so that we know what we're comparing. And maybe, shall we move on to the next one, which is the cabinet paper, agenda item 6, which is there's quite a bit that's similar, but then we have, towards the end, I think we have, again, information about the KPIs. Just trying to find it. I think it comes, is that right? I think
yes, it will be, yeah. So this report splits for the financial performance and risk.
Yeah.
So yeah, there is an element of performance, and I think one of the appendices lists out all of our KPIs as well.
Yeah. Okay. May we move on? May we note agenda item 5 and go on now to agenda item 6.
Yeah.
Do you want, who might, just a very brief introduction. I hope we've all had a chance to read this.
Thank you, Chair.
Is it Anna?
Yes, it's me. Thank you. Yes, I shall just give a very brief introduction for you. So, as I just said, this covers finance, performance and risk. On the general fund perspective, as at the end of Q1, so end of June, we weren't forecasting any variance at all. On the HRA, it was a very small variance against a budgeted surplus. And from the capital perspective, we've got a variance of nearly 9 million. I'll go into a little bit more detail. And from a performance perspective, we have 24 indicators, 13 of which are green, 5 are amber, 1 is red. We have 5 currently unrated. That's because either data isn't available or there's no comparable data for them. And from a risk, we have 2 red risks relating to housing delivery and economic growth. So whilst we are not currently forecasting a variance on the general fund, there are a few areas of income losses that we are still monitoring. And also to note that we have, when setting this budget, we reduced our income across the board by 2.1 million across a number of areas. So we're obviously tracking against a different target to what we had last year based on the back of COVID. So those key areas that we're still tracking are car parking income, and we are seeing a decline in the first quarter of car parking income, but we're monitoring that, and so we potentially will be forecasting a further loss in that area. Community centre income, licensing, town hall income and events, they're all pretty much on track with their reduced target this year. Property rental, we're still keeping a very close eye on that. And we'll have much better data, I think, at the end of Q2. And from an ODS and OCHL perspective, we're from an ODS perspective, difficult to have information due to the lack of financial data coming out of QL, but so it's quite difficult. But and from an OCHL perspective, there's less investment income that we're going to receive from those. But I think Nigel will pick up on that point a little bit later. From a capital perspective, like I say, we've got about £9 million forecast variance. East Oxford Community Centre is showing a variance, along with some other schemes like Oasley Mead and the City Centre Cycle. We can also see some big variances on the HRA, the purchases from the housing company. So we've increased that this year, but also we've slipped some of the actual HRA development. So the net difference there is around 4 or 5 million, but we are slipping a lot of our developments within the HRA. So, oh gosh, I've lost my page. And then we cover the performance indicators. And as I said earlier, we have one red indicator that we're currently reporting on, which is the number of people in Oxford estimated to be sleeping rough, with an actual of 24 against a target of 17. So, but the appendices does have more information if you want to ask any further questions.
Thank you very much.
Is that okay? Is that sufficient?
Yes, that was good. You've covered all the main points. Hello, Emma. Any questions?
Hi, Chair. My apologies for my timekeeping. I've just got held up a little bit at work.
I'm looking for any hands. Maybe I can. Oh, there we are. Chris and then Emma.
I've got a flurry of questions on all pertaining to page 23, actually. Do you want to take them all at once or one at a time?
Shall we go one at a time, if that's okay?
Cool, yeah, that's grand. So my first one is around car parking. So I guess this is a slightly more meta and long-term question, but obviously the car parking income is being down on budget is COVID related, but I guess the long-term trajectory, even post-COVID, is probably going to be a reduction in car parking income, not just because of the phased return to normality from COVID, but also hopefully as a result of a modal shift when it comes to public transport and active travel and all the rest of it. And so I guess what's the kind of long-term vulnerability we have in terms of reliance on car parking income for the council's finances, and what's the kind of long-term mitigation that can be put in place to reduce the kind of financial risk around that?
I think if I pick up a little bit and then Nigel will pick up the remaining. So I think it's just important to know that quite a large proportion is city centre car parks, but we do have quite a large amount of income coming from suburban car parks and the park and ride and the sort of the outskirts parking. So whilst we're trying to change our mode of transport, we will still have a level of car parking income, because we will still have those sort of non-city centre car parks income coming in. I don't know if Nigel wants to say anything more about this sort of longer term.
Yeah, sure. In terms of the sort of gross income that we take from car parking in a normal year, it'd be about just over 5 million in terms of gross income. We have for this financial year basically reduced that by around about 1.4 million actually, but as the report says, we are still showing a reduction even against that reduced amount of income actually. Our expectation is it does come back, basically it does start to bounce back in year 2 of the medium-term financial plan actually. But then in terms of reviewing the budget for years 3 and 4, we are also aware of likely reductions in that income in respect of Oxben's car park, for instance, which will be subject to redevelopment at some stage during that period, and also potentially Worcester Street actually as well. So, and in terms of the mitigations, that there aren't any specific mitigations in respect of car parking. I mean, that the reductions that we estimate basically going forward would need to be picked up in terms of the council's wider medium-term financial plan budget setting actually, and we'd either have to find more savings, more efficiencies, income from elsewhere, or indeed look to reduce our budget and our service spend actually. But we'll pick that up in the next iteration of the medium-term financial planning process.
You had several questions, Chris. Do you want to? How many more do you have?
Just two, I think. And
okay,
the next one
why
should be,
don't you fire ahead? Yeah.
Grand. The next one should be relatively quick and straightforward. I'm just looking at the community centre income line of the report, which although it's quite small fry in terms of numbers, I'm assuming that's basically as a result of under usage that the income target's not being met. Again, I know almost every time we come and sit down, I ask you to kind of like look into your crystal ball. But what's the kind of assessment of the point in which we're expecting community centre usage to increase to kind of quote unquote normal levels in order to kind of bring that figure back up?
I think we're starting to see that already. I think through the first quarter we started to see that. So I certainly think by the end of this financial year they're expecting that to be back up to its normal, maybe new normal, but normal levels.
Great, that's helpful. And
question?
Just quickly, my last one is really around and I suspect I might get told this is one for the company's scrutiny panel, but in terms of the ODS dividend, obviously it's potentially a worry that the question about whether or not the dividend is paid. And I think I know what the answer I'm going to get is going to be the company's panel for this one. But in terms of the guarantee that dividend is going to be paid in future years, and that this isn't going to be a continuing sort of situation post-COVID where we're not getting that dividend into the council, and what's the reassurances that we can have in terms of that?
If I come in on that one, actually, in terms of the dividend for this financial year, the ODS have still not been in a position to make any declaration basically about the amount of payment that they will make. They were due to make that at the end of July, but due to the sort of the COVID financial position and indeed the QL position basically, and the lack of financial information, they have held back in terms of making that decision. So we still don't know what amount of dividend they'll pay for this year. In terms of going forward, basically, I think it's fair to say there are no guarantees in terms of dividend levels. Basically, it does depend on to a large extent on any additional business they can get and their ability to make the savings basically that they put in their forecast plans. But we have got built into our MTFP an element of that. I suppose the other point to pick up as well, you may recall from the July shareholder meetings basically that OCHL were expecting quite a significant downturn in interest returns to the council basically, and the next iteration of this report will pick those up and how the council is trying to respond to those. Bill, is there anything you want to say in your area?
Well, I was just going to pick up on the guarantee aspect that there isn't ever any guarantee over dividends from companies, and there can't be. Directors cannot promise to pay dividends because it is purely dependent on financial results. So as a shareholder, there is limited scope for doing anything about this. There is the ultimate sanction of sacking the board at a general meeting. But other than that, it would just be representations. The directors themselves can only pay a dividend based on actual results and can only pay it when they've actually realised any profits that the company is making. So I hope that kind of covers the kind of technical elements around guarantees.
Thank you. I think you're next. Your hand is up.
Thank you, Chair. My apologies if I cut in and out a little bit because I've missed some of the answers slightly. So if I do, please do let me know. I'll switch my camera off. That might help the bandwidth. I suspect Councillor Jarvis and I have been having similar thoughts, because I had the same two questions. So I think the housing question was fairly well answered. Just on the car parking, I wondered from the it's a similar question to Councillor Jarvis, but I just want to be a bit more specific. It's slightly technical, but it seemed like the commuter parking may not recover. And I just wondered whether commuter parking is maybe, in terms of economic terms, an inelastic demand, which means that actually if the price goes up, people still keep parking there, whereas the shopping parking may be more elastic, which means if you push the price up too much, people will stop coming in. And obviously when the calculations are done every year to look at, well, what's the impact going to be, that's obviously one of the things that are built in. And I just wonder, there's a separate point, of course, which is it desirable? Is it in keeping with the council's wider aims of trying to prevent car usage? But just looking at it purely from a financial perspective, given that we're in the financial scrutiny committee, I just wonder on that point specifically whether we think going forward that actually bringing down it will be harder to increase the price, because actually the demand will become overall more elastic rather than inelastic.
Do you want to answer, Nigel?
Yeah, I think it's fair to say, actually, my recollection for the medium-term financial plan is that we haven't actually increased prices by that much. I think there may be a small percentage price increase at the back end of the MTFP, i.e. the 4-year plan. I think we are mindful of the ongoing effect of COVID, certainly around car parking income and other income streams, and I would agree that also the elasticity of demand in respect of that income stream, actually. So we have increased the sort of base income, say, for years 2 and 3 of the plan, basically. But we have got a couple of car parks which we expect to fall out, basically, as I mentioned earlier, Oxpens and potentially Worcester Street, which we have also allowed for. I think the other point as well, when we are setting the budget, and this year's obviously budget preparation has begun, and the recommendation to officers is basically, to pick up your point, you need to set any increases in charges based on your view about elasticity and whether the market will bear that. There's no point in ratcheting up sort of commercial waste by 10-20% basically if we don't think the market's going to bear that, and people will go elsewhere. So we are mindful of the elasticity of different income streams when we set the budget.
Thank you. I just had a couple of others, if I might.
Yes,
there was one of the risk indicators was regarding economic growth, and I guess it might be slightly pedantic of me, but there were obviously certain issues that were highlighted, including labour market, supply, global economy, and so forth. I was just minded that Brexit wasn't in there as one of the reasons that may be leading to some of the issues that are affecting the economic growth of the city, and I wonder whether there was a reason why it was particularly omitted, given the international nature of the city of Oxford.
I think it's more down to, we simply don't know what the impact's going to be in terms of Brexit. Perhaps it's an oversight not to at least mention it and show recognition that there will be some impacts, but I think it was more a case of not really knowing what the impact's going to be, actually, on the city or anybody else. And it's not one that I'm personally involved with, but I would imagine that was the reasoning behind that.
I'm mindful these reports should not be political, but at the same time, given that the city largely voted to remain in the EU, and the referendum was lost, but we need to be mindful that if there are impacts, we're aware of that. Just a final point around the performance indicator relating to homelessness.
Yes, I mean, Amma and Tom Landell Mills Centre, you're crackling a lot. I don't know if you need to speak closer or something.
I will try my headphones to see if that improves things.
Okay, give it a go.
Better? Is that better?
Yes.
Yes.
It is better. Sorry, my
Thank
apologies.
you. Much
It's
better.
the acoustics of the room that I'm in. My apologies. So the final thing was just on the performance indicator relating to homelessness. And I fully accept this may be the way in which it was read by me rather than necessarily the report, but I was minded that the target was 17, and I just read it as an acceptance that we've just missed the target. And as I say, I appreciate that may just be my reading rather than the intention of the report, but some of the reasoning around the weather and how it was pre-pandemic, I would have thought that that may have already been built into the target, so that if we are missing that target further, I just wonder whether that's glossed over a little bit in the report, and it's at least 7 individuals over target, and that's I'd say maybe in my reading, but I was just minded that the way that it was worded was this is a real target set for a specific reason, and the fact we've missed it is it's at least 7 individuals who have had quite significant impact on their life as a result.
Yeah, I suppose the only thing I say in defence, basically, it was not the intention, basically, to treat this lightly. Actually, 7 individuals is 7 too many, actually, and but the figures are what they are. I suppose, actually, we've done a lot of work in terms of rough sleepers, basically, and through the pandemic, we've had the sort of policy of everyone in, basically, and we've done terrific work on there, which we continue, but the figures at the end of June were what they were, and I say we weren't taking that lightly, but your point is noted, I think, actually.
If I can jump in and just say, this was an issue that was talked about at the housing panel, where they gave a housing performance report, and when I've written up the minutes, I'm happy to send them over to you, Councillor Latif, so that you get an idea of the things that were coming out from housing directly rather than by Nigel.
That'd be really kind, Tom. Thank you for your answers, Nigel.
Thank you. Tom Lander-Mills.
Thank you, Chair. To an extent, going over the same ground, I mean, with regard to the car park income, I mean, by and large, there's a strategic thing to reduce the amount of people coming into the city centre, whereas we'll still have a lot of people on the periphery. So I imagine the loss of income with regard to the car parks in the city centre, I would have thought if they're not being used, they would be redeveloped, and that should be we can make money from other things out of them, in fact, put flats or houses on them, and that should really be part of the thinking. Though there are some things, like if we have lots more bicycles, which are hard to charge, I mean, there may be other things that we want to do with the space for transport that are harder to charge or have to be charged in a roundabout way. But if they're not making money, why not redevelop the sites? Is the
two responses to that. I think first, I think this June report, it as it highlights, it's a little bit early to tell after 3 months, into the year what was really happening, and that's why we've left our forecasts as they are unchanged. I think as we get through into the next quarter, basically, we'll be looking to update that, actually, if the figures are still depressed. I think in terms of development, I mean, you'll be aware that Oxpens basically is not in fact owned by the council. We have that is in development in terms of the Oxpens area. So the Oxpens car park will at some stage disappear under development undertaken by the council's jointly owned LLP Oxwed. And also with Worcester Street, we don't actually own that. Basically, we lease that basically in conjunction with Nuffield. So again, I've mentioned that will more than likely be developed at some stage, and we'll lose that income as well. I think from a financial point of view, yes, if things aren't being used, then we'd look to develop. If Gloucester Green sort of fell off the cliff in terms of usage, basically, yeah, we'd look to do something with that. But taking out an income stream is for a one-off sort of capital sum in financial world, basically, is not as good, basically, as having that ongoing income stream. So yes, we would keep that under review, Councillor Mills. but equally, as I say, it's not as good to have the income, the ongoing income stream in exchange for a one-off sort of capital receipt, basically.
Yeah. Thank you. I've got a couple more. With regard to property rental and the write-off, I wondered where, with our large reserves, and I don't know whether we could have a sort of win-win situation with some of our slightly harder debtors, where we lend them the rent, or we would provide softer loans than the banks can do.
Well, we are working with the commercial tenants actually, and that still is a difficult area. There are a lot of businesses out there, certainly in the retail side, actually still under considerable pressure. And obviously, as the things like furlough sort of starts to drop out, and the grants from government start to sort of dry up, sort of thing, that's going to get a lot tougher actually. So we are in, I wouldn't say constant contact with everybody, but those that are in that position, we are in contact with basically. And I'd like to think that with that income stream, basically that it bounces back. But I think that's one of the income streams which we, even our projections, we are saying is going to take a longer time than things like car parking and community centres and town hall income, etc. To come back basically. So we've already factored that into our medium-term financial plan. But it's a tricky balance. But the property team I know are in discussion with many of the commercial tenants in our portfolio.
And lastly, but not least, is with regard to the ODS and QL. I mean, you've really mentioned this, but it's the confidence that we're not going to suddenly the smoke will lift and we'll have a disaster on our hands. That you don't think? You think the measures you've got in, the steady state measures you've got in hand, are good for that?
Yeah, I don't get a sense that the smoke will lift and we'll have a big problem actually. I might be proven wrong, but my understanding, we have a bit of a handle in terms of obviously the work going out the door. I mean, they can get a sense of the business busyness of operatives in ODS sort of thing. The work that's coming in. What they can't do basically is just get a full assessment in total, because they haven't got the overall figures of the charges of all the jobs that they're undertaking and the relevant costs as well. So they can't get that final position, but they do have a sort of almost like a gut feeling basically based on the limited information that they do have. So I don't get a sense from them that the smoke will lift and all of a sudden we're going to have a major problem actually. But only time will tell, and gather, I would imagine.
Yeah, I can just confirm there, because we do know that there's sort of 15,000 jobs on the system that have been undertaken and are kind of going through the process and ready for all the labour and the materials to be added. So we know that the jobs are happening. So it's just a case of making them push all the way through the system and come out into Aggresso and the financial systems.
Okay. Can we now turn to Andrew? Andrew, your turn.
Thank you. I'm afraid it's back to car parking. The fact that all members of the panel have asked about it makes me wonder if it's something we ought to perhaps think of as an agenda item in its own right. Not least because, of course, it's so connected with other policies and other factors. The fact that, as Nigel has said, a couple of the car parks are slated for development. The Oxpence car park has been, the car park itself has been closed for some time while the site has not yet been developed. The fact that, some of the public car parking in Oxford is owned by others, including the county council and indeed by the Westgate Centre, who are then, of course, dependent on other policies like Oxford and all of that kind of thing. So it's a complicated situation, but one which clearly has an important role to play in future budget planning, because it is a reasonably substantial slice of the council's income, and one that up till now has been reasonably sort of reliable. And then the other point, of course, as Chris mentioned, is that there is a sense in which the two policies pull in opposite directions, that at the same time as the council relies on car parking income, it also seeks to discourage car use in the city centre, and that also has a financial impact. And should that be written down as a cost or as an investment, that the council is making in financial terms in the future of the city? So it's just a sort of general point. But a more specific one is, we've talked a bit about the different kinds of car parking. Seacourt was recently, has been extended at some cost, and the project wasn't without its challenges. And one of the consequences, of course, of delay is that the payback period will have been affected, which again impacts on budgetary planning. I'll be honest, this might not be the place to ask, but I'm finding it a little bit difficult to find out whether the new extension is even open yet. Does anybody know? And can you give us any kind of an update on the financial performance and the payback predictions from Seacourt?
I don't know whether, well, I can only assume the extension is open. I don't know specifically. It's something we need to check on, actually. I think your point around sort of looking at car parks generally, we can do that, and we can perhaps even bring something through the budget process, which is a bit more meaningful, James, in terms of, drilling a bit deeper. What are the relative figures for the park and rides compared to the sort of inner city car park sort of thing? Because I'm talking globally when I talk about the figures and being down generally, but perhaps well, there's undoubtedly will be variances in the different car parks, basically, whether they be say park and ride or in the city. So we could probably do a bit more of a drill down during the budget process in terms of that information, and if not, we can certainly bring it into the next quarter's report, actually. But yeah, and in terms of where the payback period of Seacourt, I think we'd have to have another look at that, basically. And I don't know whether it's open at the moment. I would suggest it is, basically.
To the best of my knowledge, I've cycled by. It looks as if it is fully operating. I mean, I haven't seen any barriers to the extension.
Yeah.
And could I make a suggestion? Because obviously car parking is important, but I was going to say, and you, Andrew, are the ideal person on this group of 9 as a county councillor. I mean, to some extent, one of the issues is the coordination between buses and cars, and trying to discourage people from driving into the city centre. I mean, right now, family, it's very expensive if you stop at the park and ride and take a bus. But I know the new county is keen to try and do sensible things with transport. Is it too soon? And I'm really asking you, Andrew, maybe, because if we're going to have a proper discussion, because it's an important question, I think it's combined with county highways policy as well. Would it be possible, do you think, by, let's say, the December meeting, to start to have an informed discussion? Or because it's going to come up in the budget, it's going to be there in the medium-term financial plan, but it'd be quite nice if we could see it in the whole, rather than just in terms of what we see in the city, where I would add all the roadworks, like Botley Road. I wouldn't want to use anything really to go in that way if I could avoid it, given all the mess there with the bridge as well. But would it be possible maybe to try to get some idea from the county whether they are looking to make it better for people not to drive into the city centre?
Yes, I think it would. I mean, obviously, I'm not in the cabinet, and I don't want to speak for my colleagues, but you're quite right about the determination of the new administration to advance the active travel agenda, and I'm very happy to take that away. Maybe if Tom Hudson, as our officer, could we could pick that up, and you could.
So may I suggest, if there is time to get something together, Tom Hudson, maybe we could invite relevant people, even if it's not signed and sealed, to get a much clearer idea of our future policy county-wide, as it will maybe improve our finances as a city.
Yeah, I mean, I think.
Could I just clarify? Is that to the are you wanting that to be the finance panel or the budget review group? Because my recommendation, would be to take it probably alongside what we've got scheduled for the December meeting, which is the integrated performance report Q2, because all these things will be brought up anyway.
No, I would suggest it then, because when it's budget and you've got all the directors coming along, it's rather crowded, and I'm not sure we give it the attention it deserves. Can we agree we have it as a separate item next time? Is that acceptable? I mean, I think that would be a nice way of dealing with this issue. Did you have any other questions, comments, Andrew?
Well, I was just going to mention something completely different.
Yeah.
On page 25, just about the report about the Thomas White Oxford payment, which didn't go to Cabinet because it was overlooked. I mean, I just thought it was worth noting that obviously shouldn't happen. And I'm not sure that it ever did go to Council after that. I may have misremembered that. And just to say that it might be my fault, but that hyperlink, I tried to follow it and it wasn't working. I was trying to sort of follow the link, but that's not a question. It's just to note that obviously the council's procedures are there for a reason, and it's not why ever it happened, it shouldn't.
And I can confirm the hyperlink didn't work as well.
Yeah, the hyperlink is taken to the intranet, so it's taken it to the internal page, so it needs to be changed to be the external page.
Okay, thanks. Could I maybe just raise a couple of points? One which I suspect will come up actually when we come to budget round, which is about Floyd's Row. It appears somewhere, and I can't remember the precise detail, but it does appear in some aspect when we get the breakdown of cost, revenues and expenditures. I think there might have been some slippage, was there, in Floyd's Row? But I've just written to myself a comment. What's the situation there? Does it need, there was all this talk, it was designed for one kind of living and support, and then came COVID and it was going to be redesigned and its purpose changed. And it was a sizable investment. Do we know what the final decision is regarding the restructuring of Floyd's Row?
I don't, off the top of my head, Chair, basically, I think we need to take that away and circulate something around, I think, actually.
Because as I recall at the last budget meeting, this was quite a big item, so it'd be good to get clarity on that. It was an important part of our homeless strategy, housing strategy. Mm-hmm. The only other thing, maybe this is being pedantic, there's on page 24, so I'll try and find it. There's a comment against dwelling rent, and it says there's a reduction in rental income due to development schemes slipping into the next financial year, and the use of a higher inflation rate when setting the budget for the rent increase. I would have thought a higher rent increase would reduce, if you like, the loss of revenue. No? I mean, does it somewhat offset the other? That was all.
No, well, what we're saying there, basically, the rents are linked to CPI plus 1% under the government initiative, and we used a higher inflation rate than actually transpired at CPI, basically, when they set the budget. So there would be a loss of rent, basically, as a result of that, actually.
So we assumed too high a rate.
Correct.
Okay, because that wasn't clear.
Yeah, sorry.
It was, okay. Yeah. Sorry, it wasn't. I can see that's maybe fair. Any other questions or comments on this? And we do again have at the end the various performance indicators, which are, as I mentioned earlier, I think in rather more detail, the comments. And maybe again, if we have specific queries, we could send them via Tom Hudson and get them passed on. I'll do that for myself. Is that okay?
Sorry, James.
Thank you. Did you want to say something else, Andrew?
Yes, I'm sorry, I just forgot to mention, it's just a quick question. On page 24, there's a mention of the delay to the Oxford Flood Alleviation Scheme and slippage in the knock-on effect for Oseney Mead. But I just wondered if that delay to that scheme has any other financial implications for the council as one of the funders of the flood alleviation scheme.
Not that I'm aware of. I mean, it's as you say, Andrew. We are contributors to that basically, and the delay just means we've slipped our contribution actually. So, okay. Yeah, I'm not aware of any other implications.
Okay, thanks.
Okay, so maybe can we approve this? Thank you very much, and move on to Bill and introducing agenda item 7. Over to you, Bill.
Okay, I'll try and make this brief. So the council investments at the end of the financial year were 80 million. The actual losses against budget of interest was around about 0.9 million. Two factors relating to that. One is reduction in overall investment rates, and the other one being reductions in interest from the companies. The latter being heavily impacted by COVID, and also because of the timing of the setting of the budget, slippages from previous financial year. So there's kind of a long knock-on effect on this. I think the council has 198.5 million PWLB works loans. I think it was 20 million became due in March of 2021, which got retaken out again. So we still retain the same amount. We also had decisions around delaying areas of capital spend. So although this is reporting on the interest income, the actual expenditure on interest has also gone down because we haven't taken out borrowing, which we were originally anticipating. So the report overall is looking at the Treasury performance for the year. So there's a number of tables which compare the original estimation compared to the actuals. The other thing that's important to note on this report is that we didn't actually go outside any of our limits on our counterparty investments, which is obviously an important thing because we can only invest on the basis that's actually approved by the council. So that includes both, as I say, counterparties, but also the amount of borrowing that we take out. There's a number of other indicators, but the key ones are actually here in the report. So I think at this point, I'll hand over for any questions that might be arising.
Thank you very much. Any questions from the committee panel? Sorry. Maybe I could just ask, oh, sorry, Andrew, go on, far ahead.
Well, thanks. Yeah, thanks, Bill. I mean, this is so much outside my comfort zone that I'm going to ask a very stupid question, but just right at the beginning, you say in paragraph 1 of the report that the reduction in investment interest interest rate change is reduced from 0.9% to 0.42%. I mean, that's considerably, that's more than halved, which is a substantial difference. And I tried to just look up changes to the PWLB rates. I don't know if I was looking at the right thing, but why was there such a large fall?
Well, essentially because interest rates have gone down for general investments. So previously we got quite a decent rate from local authorities, for instance, and they have dropped to around about the rates that are paid by money market funds. The actual reduction there, if I can just clarify a little bit, the percentage that we're talking about is on general investments, so that would be excluding the property funds. The property funds have stayed, they've gone down a bit, but they've stayed reasonably stable compared to the interest rate that we receive from other investments, which are more the sort of fixed term, short term, as in less than a year investments, which is what I'm looking at there on the percentages and the amount.
Thanks.
Okay, Emma.
Just as a follow-up to that, do we know, I don't know whether all councils will release this, and we would of course expect that our investments would maybe
you froze a bit
bring in less given the last year, but do we know how we, oh, am I back? Can you hear me now? I might just switch off my camera, that might just help a little bit if that's okay. I was just asking Bill whether how we rank essentially, or how we benchmark against other councils. You know, is everyone else finding the same, or is it something to do with our portfolio of investments that we've got, which mean that actually we've been disproportionately impacted, and if we were to hold a different portfolio, that may cushion us a little bit against fluctuations?
Our benchmarking is actually done via our Treasury advisors, so they benchmark us against a set of like authorities that they also advise. So if I can caveat the answer with that, generally speaking, and this year included, we rank fairly highly against the other authorities. Overall, because of the property funds and now money market funds going into the new year, multi-asset funds going into the new year, but there are other authorities which are higher. However, they actually have portfolios which have a higher risk than we would like to support. There are councils there who will actually go out and buy equities, for instance. Whereas what we've done is we've got a multi-asset fund which includes equities, but it also includes other assets. So we're allowing the fund managers to balance the risks within different asset areas to try and flatten out the interest impact or dividend impact in the case of equities. So in short answer to your question, yes, we benchmark fairly well. And everyone's seen a reduction in the rate of return from investments.
Thank you, Bill.
Thank you. Is that okay, Emma? Is that answering your question?
Yeah, sorry, I'm mindful you can't see me nodding my head. Yes, that answers my question.
Well,
thank you, Bill.
You're nodding. Okay, Chris.
My questions are in relation to the environmental, social and governance section, so it might be worth for the flow if anyone else has any other questions related to what we've just been discussing to take those first, but I'm also happy to go now.
Yeah, go on.
Great. So I guess I had two kind of main questions on this. The first is really in relation to the ethical investment policy and practice, with regards to specifically the point A under 30.33 of the report. I had a question really about due diligence in terms of what mechanisms are being used to ensure that, for example, the council isn't investing in companies that have engaged in human rights abuses, and I guess really what criteria are being used in that regard, both in for example, are there specific industries that are being blacklisted in that regard, for example, the arms trade, or specific companies involved in particular violations, and what's the process by which the council assesses that? And then my second question really is, I mean, I couldn't help but noticing the irony in the placement of point 33 and point 34, in that the council setting out that it will refuse to invest directly in fossil fuels, and yet in point 34 saying that it holds £7.5 million in deposit accounts with Barclays, which is, according to a number of reports, the largest financer of coal in the UK and the largest financer of fossil fuel infrastructure in Europe. So I guess my question really is: was there any, in terms of that aspect of investment, is there any assessment done of the suitability of the kind of the bank or the banks or other instruments that are used to hold those investments as part of that? Obviously, it's not a direct investment, which is what the policy says, but obviously one might read the spirit of the policy to suggest that an institution like Barclays is perhaps not within it.
Yes. So on the first question, I mean, all we can do is take the advice of our Treasury advisors, and they provide us with various bits of data on sort of what companies are actually entering into. The problem with this sort of area generally is that without spending a great deal of time, you can't delve right under the nuts and bolts of absolutely everything. So I think the sort of short answer is we do what we can, and anything that comes to our attention we will deal with, and we take the advice of our Treasury advisors. Now, on the second one, yes, I understand your comments on Barclays. These green deposit accounts are separate, so they ring fence them, and we have had various bits of data from them around that, because yes, we did have concerns, and in fact we wrote a specific letter to Barclays around some of the investments that they were undertaking, sort of as sort of funding various things like oh God, I can't remember the term. Was it? No, I can't remember the term. Sorry, but there was something specific which they were investing in.
Oh, tar sands, Bill.
Thank you, tar sands. And so we wrote specifically to them on that and voiced our concerns. But as a council and with limited power, that tends to be as far as we can go as far as banking corporations are concerned, is express our concern. We can avoid investments where we know there are issues, and we do. I think the one thing that actually is that we're looking at the minute is that these green deposit notice accounts, they're effectively phasing them out by reducing the interest rates. So we are looking at where we can actually place our money effectively to replace that. So that's something which we're actively looking at the moment, and trying to find something which actually looks like it sort of ticks the ethical boxes.
Is it not correct, I mean, by way of a tiny bit of history, that when we came to look at reviewing the bank with whom we bank on a regular basis for normal treasury, day-to-day business, there were relatively few that satisfied the criteria that we have. And some, and I suspect it was when Craig was on this panel, some which people might like on ethical grounds didn't tick all the boxes that we needed to tick in terms of risk. I mean, it was nothing to do with their ethics. It was more to do with the overall risk. Is that a fair statement?
Yes, Chair, that is a fair statement, and I think that's always a bit of a concern around this area, because what we have to do is maintain the public finances and ensure that we're not losing public money. So the actual main Treasury principles have got to be paramount over and above the environmental, social and governance aspects. We sort of use the environmental, social and governance as more of an overlay, in that if the risk is too high in a particular investment, we will not go with it, even if they tick the boxes on the environmental, because we run the risk of losing public money. And actually, specifically to the point of the tender, the bank which one could argue is probably the one which you'd go with from an ethical point of view. The reason for the tender was that they were pulling out of the local authority market. So, we were stuck with whoever answers the tender, and then looking at the levels of risk relating to that. And so that is the primary driver in these things, yes.
Yeah. Any more questions, Chris? Because I have just one I was going to ask.
It's not a question, but maybe just a little follow-up. Potentially, if I understood the kind of tail end of the second answer there, the suggestion was that there's it's being looked into moving away from those Barclays accounts, and perhaps it would be helpful for us to get updates at that at a future meeting, just that we're aware of what's going on in that regard.
If I can
Yeah,
just come
please,
back on
yeah.
that, yes, that will be in our next reports. We'll give updates on what our position is, whether we've managed to find anything or not.
Tom, you put your hand up.
Yes, we were. We raised the question of the city council investing in renewable energy schemes, in particular some of the medium-sized local ones, and obviously there is this thing of due diligence, but I wondered how that had come along on the sort of spectrum of possibilities, and whether it was something that it was a more like there were more projects coming through and you were considering more things, or
if I could just answer specifically to this report, this report is purely about Treasury Management, and so if we're investing in things like the green energy schemes, etc., that is more of a kind of service related investment, whereby maybe we give a loan to an organisation in order to do something, but it's about what powers are used in order to do that. Treasury Management is dealing with the investment of effectively excess cash, which is backed by the balance sheet. But where you're delivering something like for instance, housing, that you would actually term in the sort of non-technical sense as being an investment in Oxford, that wouldn't form part of Treasury Management because it's done under housing powers, and it's like that with green type investments, in that investing in green infrastructure would be more of a service related investment.
all right, thank you.
Maybe another question, or
No, that's me.
no. Okay. If I could just ask one, I noticed that we've had discussions, particularly at budget time, about what's now called Regeneration Investments, and they're down as £20 million, and not at all much has yet been spent of that. That was in the capital budget for this year. But I do remember, and this is related to what we're talking about now, it was being discussed as something that would be eligible for PWLB funding because it was regeneration. And I just wonder, we've got the one block of 198 million of PWLB funding, which was when we took control of the HRA. But what's the status of this other funding that was being mooted for regeneration schemes?
Okay, I mean, that's a slightly different aspect in that we also cover financing the capital programme. So broadly, Treasury Management will also cover the capital programme insofar as it results in borrowing. So as far as the 20 million is concerned, I think there have been properties being looked at. And it's a case of making sure that they fit the criteria.
Yeah.
And I know there's one that is currently actively being looked at. Whether it'll actually end up coming to a actual expenditure I think remains to be seen because it's still going through due diligence at the moment.
But would that be funded? I guess the interest in this context is, would we therefore be borrowing more from PWLB?
Broadly, it depends on what else happens, because what we do is we use PWLB as a kind of last resort.
Yeah.
We will use internal borrowing first.
Yes.
So it depends what other capital expenditure comes along that we would finance from borrowing, and then how much internal money we've got when we take into account our cash flows, because we will use that internal money and run down our cash resources as a first call. So it's a difficult one to answer, but broadly, yes, it would result in borrowing if we incurred the expenditure, but whether it would be to PWLB is a kind of overall Treasury Management decision as to whether we've got the free capital resources, cash resources internally to use internal.
Okay, no, thanks very much. Are there any other? I see there's a chat. I think this was a chat from Hudson. Which report will that be, Bill? I don't know what it's referring to now.
Sorry, that was in regards to when Bill was saying that some of the information would be in a future report, and I wasn't quite sure which report you were referring to.
Other Treasury Management reports. So the next one that will come along was our mid-year report.
Okay, so it is mid-year.
Yeah, the mid-year will be the next one, and then there'll be the Treasury strategy. And depending on our progress, it depends on how kind of concrete the information will be, or whether we're saying we're still working on it.
Brilliant. Okay, that's great. Thank you.
If there are no more questions from panel members, I think maybe we can thank everyone and note, I mean, there are one or two things that I think we requested, the main one being to try to have, with county involvement, all being well, a discussion about car parking and the whole buses parking and the like issue for the next meeting, so that we could have had that discussion before we go to the budget meetings. Amma, you put your hand up.
Apologies, Chair, I didn't mean to interrupt. I was just hoping to raise an AOB about future meetings, but I'm happy for you to complete your point if not done so already.
So I didn't catch what you said there. It faded off at the end.
My apologies. I'm having some IT issues. I was saying I was intending to raise an item of AOB about future meeting dates, and I didn't mean to interrupt you if you wanted to.
Oh, sorry. Okay. No, please. I was just trying to think of where we've come to after this discussion. I mean, the two main things that I remember, maybe Tom Hudson can remind me. I mean, one is about what I've just mentioned on park and ride, parking, buses, all the rest, and our prospects on that with county involvement. The other one is just to invite people to send any specific comments on the performance monitoring indicators via Tom Hudson, so he can combine them, and then we can pass them on to the relevant officers to respond for the next meeting.
That's correct, Chair. That's all I had.
Okay. So, Amma, what AOB did you want?
Thank you, Chair. I just wanted to clarify. I know there have been some email communications about the dates for the budget review group in January, and whether the dates, as in the agenda, are the finalised and correct dates, and whether we have agreed that they will be held virtually. I just wonder if we could just get confirmation that those dates are correct, please.
So, the dates that are on the agenda are the ones that I put down after consulting with you guys and with Nigel, etc. So they are the agreed dates, and it is confirmed that James and I have chatted, and it is confirmed that these meetings will be held virtually, but future finance and performance panel meetings that are not the budget review group will from now on be held in person. So the budget will be virtual, but other finance and performance ones will not.
And can I just clarify, Tom, because there'd been some discussion around the Friday the 7th. So Friday the 7th is no longer one of the meetings.
It's no longer, no. Okay. Generally speaking, I got negative feedback about having it on a Friday. So yeah, pulled the plug on that one.
Thank you, Tom.
Okay. I think the comments were reflected in the final calendar. So if there's nothing else, if we note the next meeting dates, the next meeting is obviously the last one before we go into the budget. And it does get quite busy after that, but I think we should have a good discussion next time. So, and we're going to have, are we not, feedback to scrutiny after this meeting as well. So this will be reported back. I'm not sure whether we'll report back on the minutes from this meeting. Will we, Tom?
So we will have the reports from the last meeting. We have we've bit of a own up time. We failed to do a report back from chairs at the last meeting, but it would be good to do that at the next meeting. So you can feedback very briefly, perhaps, just on what's been said here, even though there are no actual recommendations coming to Cabinet.
Okay, thank you. Okay, if there's nothing else, I would like to thank you all very much. See some of you then, are we all on scrutiny? Anyhow, see some of you on scrutiny later this week, maybe even at Cabinet. So no, that's next